Wall Street is completely ignoring the most important chart in Tesla's history. 300 robotaxis on a road today. But here's what most people are missing. It's not about the number, it's about the trajectory. Tesla's already operating at Austin in the Bay Area, with Dallas, Houston, Phoenix, Miami, and Las Vegas all planned for the first half of this year. In a 15-city rollout, the fleet hits over 15,000 vehicles and $850 million in annualized gross profit by the end of 2027. Scale that to 50 cities, nearly 40,000 vehicles and over $2 billion. And that's before the dedicated Cybercab even ramps. The future of transportation isn't coming. It's already here. We got Cern Basher joining us today. He's a chartered financial analyst. He runs his own investment advisory firm called BrilliantAdvice. They provide wealth management services. Welcome, sir.
Hi, Herbert. It's good to be here. This is an interesting topic because people like to think in a linear way, and these ramps may not be linear.
Yeah. So this topic of robotaxi ramp scenarios, you put it together because, first of all, it is the most important topic for all Tesla investors today. We are all debating each other and we're saying, okay, well, robotaxi, yes, we've got 7 cars, that's unsupervised. Yes, they promised 7 cities by the end of this year, but does it matter? What's going to happen to the stock? We, in our Cybercables show, we had a healthy debate about when would investors realize this is a real thing? And what you've done, I guess, is put together scenarios of what might happen today regarding
Yeah,
this.
these are scenarios. These are not predictions. These are just scenarios to help us understand what we're looking at here and how this impacts Tesla. So first thing, again, this is not any predictions that I'm making, but I think it's important for people to understand the sort of the shape of these curves and what that means. And the main message is how sensitive this is to the trajectory of these curves. And we'll get into the details here in a second to explain that.
Nice. Good photo. It doesn't look like you used AI for this one. Usually you do, but this one looks like it's real, right?
I believe this is a real shot. Yeah.
Yeah. It's gorgeous.
Wasn't mine. I'm not sure who took this.
Yeah. Beautiful. Beautiful photo.
So as of this morning, when I first looked at this, it was actually under 300, and then it updated not too long ago. But just before we recorded this, we now have a fleet of over 301 vehicles, according to the RoboTracker website, 213 in the Bay Area and 88 in Austin. And 7 of those vehicles in Austin are unsupervised. Now, the numbers on this public tracker are different than what Elon mentioned on the quarterly earnings call. He mentioned at the end of Q4, or maybe it was as of the call date. I'm not sure exactly the time frame, but he talked about having 500 vehicles in the fleet. So it's possible that this public tracker isn't quite accurate, but it's probably pretty close.
Was it actually Elon that said that? Because I seem to remember it was Ashok who said 500 during the peaks, because obviously there's a certain number of cars that are out there, but then when they're needing peaks, is that right? Or did I misinterpret that?
I think Elon mentioned the number, and maybe Ashok added that part. I think there were comments from both of them about that, but my recollection was that Elon was the one that mentioned it. So, you can see that we're making some progress here. The ramp in Austin, I think, initially was very, very slow, and you can see it started to pick up more recently and then leveled off again. That's the yellow or the gold line. And then you can see that there's a pretty good ramp in the Bay Area and quickly surpassed Austin, and then shot straight up there in November and then leveled off, and then now it's continued to climb again. And then just as of today, another little bump up. So they're adding vehicles to the fleet all the time. And so the question is, where are we going to get to as far as fleet size, let's say by the end of this year and perhaps by the end of next year? And there's a lot of, I think, considerations that go into this. And clearly, this has an important implication for the stock, because a lot of people are saying, well, we need to see X number of cars in order for the stock to respond. And I wanted to explore that topic, that idea, a little bit more detail here.
So the number 7 is the unsupervised. That's how many that's been spotted. So first of all, we don't know how accurate Robotaxi tracker is, but what they do is that anytime somebody finds a license plate, they say, okay, let's register it. So if anything, this could be undercounting what's out there, but it's a good way to see trends. Now, 7 is the unsupervised number, and that was going up by 1 every day or every other day last week. So that's interesting to catch what's happening there. But the Bay Area is still people, supervised. There's still somebody in the driver's seat. And so that's what we're waiting for. Even though the increases, we want to see them actually remove that or change that. That's still the big milestone there as well.
Yeah, and the interesting thing about this chart, I think, is you look at the shape of this curve and you sort of say, okay, where could we be in 3 months, 6 months into the year? And that's an interesting challenge. Obviously, there's no clear shape to this curve just yet, right? We've got one big stair step there in the Bay Area. We've got a significant ramp up in robotaxis in January in Austin, and then a flat line again.
Yep.
So,
Okay.
as much as we might want to see a nice clear curve, we're not going to get that just yet. Hopefully, over time, it becomes a little bit clearer, and they have a bit more of a program, particularly as they add new cities.
Mm-hmm.
They have a bit more of a program in terms of how they, or a regular cadence, I suppose, and how they add more vehicles. It would be nice if it was sort of a set number per day. That would be much easier to model if that was the case. Now, the interesting thing is, on that earnings call, Elon did talk about effectively doubling every month.
Mm-hmm.
Now, there's a limit to that because you start doubling the numbers and they get pretty big pretty fast. But even so, even if that persisted for a few months, that would result in some pretty exciting numbers.
Mm-hmm. And well, the debate everybody's having now is, did he just say that, just like he said so many things in the last 6 months that didn't happen, or is this truly a company operational goal? And I think from everything I've been following up, it sounds like it is truly an operational goal. We'll still see if they hit that, but that is the goal.
Yeah, I think Elon tends to throw out some fairly aspirational targets. Certainly, last year he said that we wanted to be in cities that represent 50% of the country's population by the end of December. Well, that didn't happen. That was aspirational. It didn't happen. I'm sure they have very valid reasons as to why that didn't happen. Again, you don't want to expand to 50% of the population if Robotaxi isn't ready yet, in whatever way that means. It might just mean that they don't have the cleaning equipment available to do that yet, right? It could be something like that. Or it could be something associated with FSD that they were working on, which I think is probably more likely. But that doesn't mean that that idea is history. It just may come a little bit later than what he wanted. And again, he's repeated that again on the fourth quarter earnings call. A similar statement about being in cities that represented half of the country's population.
Okay, sounds good. So let's go to this post here, because this post is in reply to me. You were debating me, weren't you?
Well, I wasn't going to mention that here. I was going to say that there was a person on X that was, completely misinformed, and I was setting them straight. But now
Okay,
that
let's.
you admit that it was yourself, yeah.
I do not admit that I'm the misinformed. Let's discuss the scenario of what we're talking about here. The
Yeah.
debate we started at the Cyber Bulls show that we did live stream yesterday was, at what point does Wall Street, do investors recognize that Robotaxi is truly a step change and could be a catalyst for the stock? And my position was, some people were saying, well, as soon as the number of robo taxis unsupervised is at 2,500, that's equivalent to Waymo. That's what Waymo does. When they surpass what Waymo's doing, that's a big milestone. And I said, well, I don't think so, because the milestone to me is not if they pass Waymo. Waymo is already existing today. It just means that you're offering what they're offering. It is just like 6 months ago, everybody said, "Oh, the day that they remove that safety monitor, that's going to be a big catalyst." Didn't happen. It's kind of all built in already to this PE ratio that we have for the current stock price we have now. But I did say that I do think that a certain number of robo taxis, when you hit, give me a number, 5,000, 10,000. When you hit that number, that's when you have, people can calculate the significant, meaningful impact to earnings in the future years. That's the number I was saying on. And then you come back and you go, well, if 5,000 is a magic number, then why isn't 4,950? Why isn't 4,900? Why isn't, well, come on. But okay, you tell me your theory.
Yeah. So my point here is there isn't a magic number. My point is
Right.
it's more about the trajectory of the growth. Because let's say in your mind, your magic number is 5,000. I'm just putting numbers in your head. You didn't say this, but let's say it's 5,000. Somebody else can easily say, well, okay, I'm going to front run Herbert and make my number 50 cars less than that, right? Because if I know if Herbert's waiting for 5,000 to buy heavily into the stock, I'm going to buy when it's 50 cars less, because I'm pretty sure once they get to 4,950 that 5,000 is the next step. So you can go on down that line and you can sort of say, okay, well, it really isn't about the number, but it's really about the growth rate and the trajectory of that line. Because even if they're only at 300 cars today, and it's clear that they're on some trajectory that gets them to 5,000 by some point in time, then you can have a lot of confidence in that. I don't think actually reaching a number, a particular number, whatever that number is really all that relevant. It will be for some people, for sure. Some people are probably waiting for a specific number to say, yeah, they're bigger than Waymo, they're this, they're that, the other thing, right? Or they may even be waiting for, I want it to be a certain amount of revenue before I buy into this whole robotaxi idea. I want them to be in 5 or 10 cities before I buy into this idea. Sure, there's going to be that. There's going to be those people. But my point is, if you're really looking for, where Tesla is going to be, it's the trajectory of the growth that really is the telltale sign, right? So I'm not saying that the numbers aren't important, but what I'm saying is the most important thing is the trajectory of the growth that'll get us to whatever number people are looking for. And unfortunately, right now, you look at that previous curve that we showed, that's pretty hard to figure out where that line's going. 300 vehicles, that's a great start. How long will it take them to get to 2,500, 5,000, 10,000? That's the ultimate question. And the crazy thing about it is it leads to some very different economic results in a fairly short period of time. And I'll take you through some of those charts in a second.
So I think you're right. Of course, there's people that are going to front run it. But I guess what we're all trying to do is kind of like, forecast and guess what could be a real catalyst, the moment when people realize it. And the vast majority of people are laggards. They're not innovators. They're not like jumping ahead when, there's a lab that proved that you can now live to 200. And there's a lot of people who get excited and do it. And others will say, yeah, sure, let me wait and see. And not until, even after it's been approved by the FDA, it's still not enough. They need to wait until they see, millions of people using it. And then they see the trend. Then they go into the stock. The vast majority are there. That's the group. That's all I'm saying. So you got to wait until you have large numbers before people really wake up. But yeah, okay. I mean, again, yeah, you and I are less interested about is this a catalyst, not a catalyst. It was a fun thing that James was getting us to answer the question. But what matters is trajectory. And so let's take a look at your scenarios.
Sounds good. So the first thing we know is, again, Tesla disclosed that they are going to roll out service in other cities. So Dallas and Houston here in Texas in the first half of 2026. So that's sometime in the next, 4 months? We've got Phoenix in Arizona. We've got Miami, Orlando, and Tampa in Florida, and then Las Vegas and Nevada. So we've got an additional 7 cities to add to the current 2 that they're operating in. So these are things I think we can expect and sort of count on for, the next few months. Again, there could be a delay in one or more of these cities, but this is what they're aiming for. Okay, so that's important. So we're not just talking about ramping in the Bay Area and in Austin. We're now talking about other areas.
Yeah.
Okay. And then, so let's look at what a rollout might look like in one city. I just arbitrarily put this together and I said, okay, here's a city. You might roll out for a few months and you roll out slowly. And then there might be a little bit of a jump so that you get to 200 vehicles, let's say, within 6 months. And then there's some growth rate where you're adding vehicles on a regular basis, perhaps as you're staffing up, perhaps as you're securing additional facilities, whatever it might be. And then I just arbitrarily capped that at 1,000 vehicles in a city. Completely arbitrary approach here, okay? But I just want to show you what this looks like if you do that. This might mean that, we've got enough vehicles in the city, we're capturing a certain market share. We're going to not focus on growing in the city. We're just going to now add another city once we get to 1,000 vehicles. And as we've seen in a show that you and I did about Waymo, it's actually more economic for them to roll out more cities than it is to put more vehicles in the same city because of their cost structure. That may also be true for Tesla if they don't use customer-owned vehicles. If we're just talking about Tesla's own fleet, they will have a similar kind of issue that Waymo does, but at a much higher level than Waymo because Tesla's cost structure is much lower, okay? So that's why I arbitrarily capped it at 1,000. The cap for Tesla in any one of these cities is probably a lot higher than this. But just for the purposes of this illustration, I kept each city at 1,000 vehicles initially.
And based on this, and again, this is just an illustration, It looks like that it takes 2 years from they launch to get to 1,000.
Something like that per city, roughly. Yeah, and this again in this simple analysis. So on the next page, it shows what a 15-city rollout might look like. So on a 15-city rollout, using the numbers I had here,
Yes.
capping each city at 1,000, you get to about 6,000-ish vehicles, let's say, over a couple of years. And then maybe 15 in year 3, something like that. And again, the model sort of assumes you're adding sort of 1 new city a month. That's the cadence on that. You're not just going into 7 new cities all at once. If you did, that would bring everything a bit more to the left. So it depends on how quickly you're rolling out new cities, and then of course it depends on the ramp within those cities. I would imagine over time, it's going to be easier and easier for Tesla to ramp up in each given city. That the ramps that we've seen in Austin and the Bay Area are the slowest ramps we're ever going to see in any cities.
Great.
When they roll out Florida, when they roll out Houston and Dallas, those ramps should be much quicker as they learn how to do this quickly. So there's probably some acceleration in some of these numbers that's not represented on this chart. So my point with this is we get to numbers, in the 5,000 range, within a couple of years. So by the end of this year, basically, right, we're in that 6,000 range. And then by the end of next year, we're easily into the 15, perhaps 20,000 range with a fairly simple expectations for ramps. Okay.
So based on this analysis, now the 15-city rollout, though, by December 2026, which is the end of this year, how many cities is this considering at this point? How many cities have we had now?
I have it in 2 cities now.
Okay.
Right.
I just
And
want to
then I'm
confirm
adding 1
that
a month.
because some people say the Bay Area is like 3-4 cities, right? So I'm curious.
Well, yeah, that's one location as far as this model is concerned.
Okay, good. So
Yep. And then I'm adding 1 a month.
Okay, so it doesn't stop at by July. There's supposed to be 7. There should be 9. If everything is set right, they should have 9 by July.
Yeah.
And then from there, you're going to add 1 a month.
Keep adding 1 a month.
Okay, that's fair. And so if that happens, and of course the 1 a month, they're very tiny starting point anyways. But you're saying that by the end of this year, if you do go this route, it's 6,000 cars.
Something like that. Let's call it 5 to 7,000.
Okay.
Yeah. And so let's think about this now in terms of economic terms. And by way of background, last year in 2025, Tesla had gross profit of about $17 billion. Some people have argued that Robotaxi becomes this catalyst once it becomes a certain percentage of Tesla's revenue. I did it on gross profit. Yep. So there you go. So if you think that threshold's 5%, then that's about $850 million.
Okay. See, I like this. Yeah. And the
10%,
reason why, the logic is that when, again, the mass investors, the Wall Street guys, when they map this out and they go 5% of profit is coming from this new business model called Robotaxis in this case, that's when they go and say, okay, let me look at the ramp. Oh my God, it's ramping fast. It's high margin. This is significant. I'm going to give it, I'm going to treat it a little bit differently. That's the idea. The 5%, anything lower than 5%, they'll go, yeah, sure, whatever. Superchargers, yeah, sure, whatever. It's not significant. It's a one other line business, but doesn't really move the needle, as Elon said. It has to move the needle. So that's why I think 5% makes sense.
Okay. So keep that in mind. It's $850 million based on last year's numbers.
Okay.
My point to that would be is that I've always said that revenues and profits are the last thing you see on a new business rollout. Yep. So if you wait for that, you're looking at a lagging indicator.
True, but again, like I said, many investors will go and say, "Well, you hit 5%. Okay, great. This can get 100%. This can get 200%. This can get 300%. But at least at 5%, my risk is low. I know it's serious. I know it's working now. The program's working.
Yes.
I'm now going to invest then." I think the vast majority of people that's when they jump on, not prior to that.
That's right. And my point is that that's fine. But my point is to a retail investor, if you want to front run that, you don't wait for the revenue and profits to show up. You look at the numbers in terms of the trajectory. Because then you'll be able to front run what those other guys are going to see on their spreadsheets. After it's reported, then they wake up and say, oh my gosh, look, it's now 5%. But you can tell that's coming by looking at some of the other numbers beforehand, because the 5% of the gross profit is something that comes much later.
That's the word we've been using is forcing function. I don't know who came up with that. I think it was
Not sure if it was Joe or James.
No, it was Joe's been using it a lot, but it came from oh gosh, I'm forgetting his name right now. I'm so sorry. Anyways, the idea of forcing function means that that's the moment when you can't just, it's no longer a story. It's no longer, oh, I'm gonna make a risk and jump. No, this becomes like, yeah, no, I have to now evaluate it, and now I have to invest in it because it's a fact. It's no longer this debate. That's what that's what we're talking about. The forcing function, where the vast majority of investors must now invest in this.
Yeah, and I think that we're going to see that forcing function activate itself on Wall Street in layers.
I think it's Lord Pretty Frocco, who's known on X. He's the one that came up with the forcing function idea first, but Joe uses it a lot.
So for some investors, that might be a 5% threshold. Other investors might have a 10% threshold before they take notice. So there's going to be some layering, I think, to this. It's not like all of a sudden Wall Street wakes up in one day and it's like, oh my gosh, it's 5%. No. We now have to model it in our spreadsheets.
Of course.
There's going to be some that are able to look at the trends beforehand and start buying the stock well before that happens. By the way, 10% of gross profit would be 1.7 billion, and 15% would be 2.5 billion. So just keep those three numbers in mind: 850 million, 1.7 billion, and 2.5 billion. So for this scenario, 15 city rollout by December 2027, you're at an annualized run rate of about $850 billion. You're at 5%. Okay. If it was just 15 cities, and that's all they did.
Capped at 15. Yeah.
Capped at 15 cities, capped at 1,000 vehicles per city.
Yeah.
That's what they capped it at. Then you'd get to your 5% of revenue run rate at that point.
Okay. I like it. I like it. This is, I think for me, this is a very, very conservative analysis, which is a great end cap to this whole thing. So one of the potential worst case scenarios would be December 2027 is when we hit the 5%.
Yeah.
And again, you've been telling me not everybody has agreed that that's the actual number, but 5% of profit is a significant impact, meaningful.
Okay. You could take that and you could build some models around that and make some projections. And that's what the Wall Street analysts would do. Okay. Now let's lift the 15 city cap and go to 30 cities.
Right.
So now instead of 6,000 or so vehicles at the end of this year, it's more like 10,000. And it would be more like 28 to 30,000 by the end of 2027. Okay. And in that case, your run rate on gross profit on the next slide is about 10% of gross profit, about just under 1.6 billion. 10% is 1.7 billion. So we're in that range of being 10% of Tesla's 2025 gross profit.
And then the 5% would be in April of 2027. So basically a year from now.
Yeah.
If it was a 30 city roll, are you gonna show us a slide where if it actually does happen the way Elon said it was, which is doubling every month, are you gonna do that?
I didn't, because I don't know when to stop that doubling, because it gets pretty crazy pretty fast. But I am going to show some
I think we need to at least play with that, because that could happen. That's one of the scenarios that, however unlikely, that is what the goal is. For the whole company.
If I had more time to prepare for this particular show, I probably would have gotten a little bit more crazy, but I did hold back a little bit here. Trying to be very conservative with this.
Okay.
So if they keep rolling out one city per month, here's what that might look like by the end of 2027. Okay.
Okay.
And then now let's look at 50 city rollout, right? They just keep rolling out. Now you're looking at, and by the way, I'm accelerating the growth rates a little bit. That's why the 2026 number is changing. So if they're rolling out 50 cities, that means things are going well. They're probably growing faster in those other cities to start with as well. Right. So in that case now, because they're more confident, they're rolling out faster, we now have about 13 to 14,000 vehicles by the end of this year. And then by the end of 2027, you're close to 40,000 vehicles. These are the scenarios, by the way, where it's just Tesla's fleet. The scenarios, I think, that Elon is talking about, where he's doubling, every month, he's also including the fact that customers can put their own vehicles in. And this is actually an important element of Tesla's economic model here, because like we discussed with the New Street Research report that came out, that showed the problem with Waymo scaling is they get to a certain level in a city, and if they put more vehicles in, they don't really make any money, because they can't operate at a level that's above their cost. So they're only capturing the peak times, and the other times are kind of uneconomic for them. So it doesn't make any more sense to put more vehicles in a city. It makes more sense for them to go to a new city and capture the peak. Tesla can address
I
the
think you're
peak.
saying the base, capture the base. I don't think you mean the peak.
Well, the peak in terms of the high price, the cream of the the robotaxi market in terms of when the prices are super high. They can charge a lot more and capture that and make profit. If they're operating during the period of time when there's low demand and the prices are low, they're losing money. So they have to capture those peak pricing in order to be profitable in those cities. And if they have too many vehicles, then they're not capturing enough of that peak. They're capturing more of the base that's not profitable for them.
That's not the way I understand it. So maybe we're saying the same thing. I'm just misunderstanding it. The way I understand what New Street Research said is that if you have a city and you're rolling out a ride-hailing service, a robotaxi service, Waymo has 500 cars maximum per city. And the reason is 500 cars, all those cars are very, very busy all the time, like majority of the time.
Yeah.
If they add any more new cars, those guys can only help during the peaks. But then during the rest of the base, they don't really need it because 500 is all you need for the base. And so those new cars, if they add another 500, if they're trying to shoot 1,000 for that car, that 500 cars, yeah, they'll hit a couple peaks. The morning rush hour, the late rush hour, maybe there's a concert that night. The rest of the time, they're not being used because they're so unprofitable now. They'll be so unprofitable when they only use for certain periods. It doesn't make sense for them to make a 500 car city to a 1,000 car city. Instead, let's go launch in another city, would put the 500 cars there. That's why they've got 10 cities, 20 cities, and they're like boom, 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 because that's why. So maybe you're saying the same thing, but that's my understanding of how
We're
it
saying
was
the same
explained.
thing. I think you just said it much better than I did. So thank you for that clarification. In Tesla's case, if they used customer-owned vehicles, Tesla's fleet serves as that base 24 hours a day,
Yeah.
and the
Yep.
customer-owned vehicles serve the peaks.
And they don't have to pay for it, and
Yeah,
then they only come in when needed. It's exactly what Uber does, which is, oh, there's a concert tonight. I need another 200 cars out there in the downtown, and so let's go and encourage the other, Uber riders to bring their cars in. But those guys don't need to be there the rest of the time. They just want to be for that peak, and that's what's happening here. If you use customer cars to flood, I still don't think that those customer cars, Tesla will not be able to do this until next year. It won't happen this year. At the very earliest would be late next year. So I would not
sure.
expect it to come anytime.
Yeah, and I'll show a couple charts in a second as to how that might impact things and in a pretty major way.
Yeah.
In terms of this 50 city rollout, Herbert, we're looking at a run rate on those 40,000 or so vehicles in 2027. The gross profit run rate there of between 2 and 2.5 billion. So
Okay.
that's
And
again
then,
about 15% of Tesla's 2025 gross profit.
and then
Okay.
again, where are they at 5%?
5% is
800?
about 850 million. So it's about November,
This year.
December of this year.
Yeah. So, and these numbers are not, you're just saying 13,000, 14,000 cars
Yeah.
by the end of this year. Do we think that Tesla has a chance to get 14,000 cars? And if they had, what is it now? 500,
300.
250, 300?
Well, according to the tracker, it's 300. According to Tesla's disclosures, it's around 500, maybe more.
But if they have 7 cities, you would think and that's what you just did here. That's what you did here. Okay. Very, very
By the
interesting.
way, I took that Robo Tracker chart that we showed on the first slide, and I fed it into ChatGPT
Mhm,
and Gemini and
mhm,
Grok.
mhm.
And I said, based on the trajectory of this chart, give me your best projection for how many vehicles we'll see in Tesla's robotaxi fleet at the end of 2026.
Yeah.
ChatGPT said between 3,000 and 5,000 was its best guess based on the chart, just the numbers in the chart. But 8,000 to 10,000 is still realistic and not hype, according to ChatGPT.
Yeah.
Okay. Gemini came up with 2,500 to 5,000. And Grok, I think, didn't really make its own projections. It was sort of going back to the idea, oh, people are saying this, people are saying that. It didn't actually follow my instructions. So Grok was a bit of a failure on that. I didn't get a chance to further query it, to force it to make a projection. But ChatGPT, I think, gave a nice response.
Yeah.
In line with some of the numbers we just showed here.
Yeah.
So let's look at this for a second. So if we go to the next page, this is just kind of, modeling out the fleet, assuming a certain growth rate. Okay. And in this particular example, I'm only at, let's call it 3,000 vehicles by the end of this year. And then you just keep that growth rate going, you're at 42,000 by the end of 2027. This is independent of how many cities and how many cars we're adding to each city. It's just a growth rate model. Okay. But I want to show you how sensitive this is. If you go to the next page, this is a similar ramp, but a little bit higher growth rate. And the end of the year number goes from 3,000 to like 7,000 for this year, and from 42,027 to 268,000. The ending numbers on these charts are very sensitive to the growth rate trajectory in the chart. And this is going to be very interesting because even at the point that it may become quote unquote obvious to us how fast Tesla is growing this business, there is room for significant interpretation as to where they're going to end up at any given point in time. We're going to see major arguments and discussions among people about how many vehicles Tesla's going to have in Robotaxi at different points in time. And I'm here to say that expect that. And that's warranted because you tilt the growth curve up just a little bit and you end up at a very different destination than if the growth is slightly lower or slightly higher. So just prepare yourself for these discussions about how many vehicles Tesla's going to have. And the analyst models, when they say, oh, we think Tesla's going to have 40,000, and some other analyst comes out and says, no, it's going to be 250. And people will be like, why is it so different? It's just slightly different growth rates are going to result in very different ending values.
Did you also include the idea that Cybercab? So this concept is, of course, Tesla does not need Cybercab to roll out robotaxis. They can use a normal Model Y. They can pump those out and include them. That's what they've been doing so far. But if the Cybercab production actually happens in April and everything's pointing to signs that that is actually on track, how many Cybercabs do you think that they'll do by the end of this year? If they do 7,000 Cybercabs, this is like irregardless of all the other cars you got in here.
Mm-hmm.
Well, it's like I don't think anybody would argue that, yeah, there's a high chance that they'll do 7,000 Cybercabs by the end of this year if they start in April. In fact, 268,000 by the end of next year, that's not unheard of that they would have that many cars, 50,000 maybe next, if you're really, really conservative, 100,000 next year. And they will all need to be for robotaxis. So anyways, I just wanted to put that in terms of like, these sounds like crazy numbers, but actually, not really.
Not really. Not really when you can factor in you've got Cybercab production, as you just mentioned. We've also got the other wild card of customer-owned vehicles.
Right.
Which, again, I think is one that people are not paying attention to. They have very low to no expectation that that's going to happen.
I'm just basing on what Ashok said, which is, yes, we are thinking about it already. So that's good news. We're thinking about it. They've confirmed every earnings call that it is happening. Elon just confirmed it 2 weeks ago. So it is happening. But Ashok said that, well, that's a whole program. Like in order for us to roll that out, we need to certify every car. So my car, before they just, I can't just sign up into my app and then put it in today. There has to be a system that it needs to first go to Tesla service, or Tesla, how smart Tesla is. They go and just they press a button and then they do a thing. They need to know, is your tires bald or not, as one example he gave. And once he has a quick, view, now it could be that it's seamless because the plan was always that it had to be cleaned. And so if I say, okay, I want to put my car in tomorrow, then the car goes to a Tesla service center and then it gets cleaned. And while they're cleaning, they'll do a certification and then it gets put in. And then when it comes back to me, it needs to be cleaned before it gets back to me anyways. And so that whole system has to be put in place. That's why I just think that I'm not going to count on it this year.
Yeah, the interesting thing about that, though, is that could take us from what might be, call it the red line, to the trajectory on the blue line.
Yeah.
Very quickly. You can get a stair-step situation very quickly here by doing that. Also, the other stair step, as you mentioned, is Cybercab. You start pumping those out at scale, you suddenly stair step up the growth rate. So, you go from the red line to the blue line with customer-owned vehicles going in. You go from the blue line to an imaginary green line on this chart with Cybercab being added. There's a number of additive things here that can happen. Of course, the big wild card, I think, is the regulatory environment. We are seeing a willingness, I believe, in Congress to deal with this, and that's encouraging. But the question is now is the time frame.
Yeah, the Safe Drive Act passed this week in a small committee, 12 votes to 11, so it was tight. That tells you something. Maybe this is not a slam dunk. But now it passed, and means it goes through the House, it goes through the Senate, and then it will go through the president. But everything go according to plan. If everything is, happens, depending on willingness and all that, it says here that there's a chance that that could go in effect this year in June, like summer. It's possible that it can be summer this year. So I don't think that matters because that's 95,000 Cybercabs available. That I guess that does matter because you'll be capped at 2,500, unless. But again, I don't see there's a real. Okay, what they said was, okay, let's say that doesn't pass, and now you're capped at 2,500. Great, that's only for 2,500 Cybercabs where you don't put a steering wheel and pedals. For the rest, put steering wheel and pedals. It's not going to be as comfortable, but it can still. That's why the seats are really far back. I don't see why you can't have a steering wheel and pedal and still be basically a robotaxi. Tesla's already figured out that if you go and touch the steering wheel, that you won't. Nothing will happen. You can't move the car, and it'll just flag you and says, "Keep doing that, and we're going to kick you out. We're going to stop it." So you'd stop doing that, but it doesn't do anything. So.
Right.
Although some people told me that the gas pedal is something they can't stop or something, that not the gas pedal, but the pedal and the brakes. But I don't know how true that.
No, I'm sure they can.
Right, because it would all if it was a Cybercabs, those ones they would make it's steer by wire, steer by brake, all that, so they would be able to just disable it electronically.
Right.
So I don't think that stops Cybercab production.
Yeah, they've got a very strong fallback position, in my opinion. It wouldn't be ideal to be producing lots of Cybercabs and have nowhere to put them. That wouldn't be great. So the timing needs to be matched up fairly well with their ability to put them in service. But Tesla itself, I think, has a strong backup position in terms of rolling out Robotaxi with Model Ys. Those work very effectively.
Okay, so huge variation is what you're trying to make in case of growth rate. Yeah.
Yeah, and that's the point again, is not to focus so much on a number, whether it's 2,500, whether it's 5,000, whether it's 10,000, whether it's whatever, is that it's the trajectory, it's the the movement towards some higher number and how fast that's growing. And I think there's going to be quite a bit of uncertainty around that for some time. So that's going to, I think, create some opportunities for investors because a lot of investors are looking for certainty where there is none. And the certainty I think that you have is that this is a massive new business opportunity for Tesla. The uncertainty is around the timing and the growth and the trajectory of it. So as an investor, it's sort of how are you wired? Do you want the certainty of the economic result, or do you want the certainty of, no, this technology is ready to go, that Tesla is going to be able to roll this out given all these issues that we've just talked about, regulatory and so on? You just have to decide, I think, sort of where you are in that spectrum of certainty versus uncertainty and the timing of all this. As we've talked about in a previous show, a delay in Robotaxi or delay in Optimus doesn't really affect the present value of the company that much. But we've seen in the stock market cares about short-term versus longer term a lot. We see that with all kinds of companies. And this is why companies typically will skyrocket or drop after an earnings call, because there's something in the call that was said that delays or pulls forward one of the numbers, and the stock market seems to care about that. But as from a fundamental perspective, when you actually run the numbers and look at how it actually changes fair values, it's usually not by that much. And this is what I think creates a lot of opportunities for investors, if you understand that.
All right, let's play the game of if Elon and Tesla actually do hit their targets, and their target is doubling every month. Let's assume that there is 300 today. So We're middle of February.
Okay, so I have my model in front of me, and I'm just going to put in 100% growth. So by the end of 2026, you're at 820,000 vehicles. I started, by the way, with a number of 200 at December, end of the year. So then you get to 400 in January. Okay, which we're not there, but other companies said they're at 500. So fall at 400. So now we're at 800 by the end of February. You're at 1,600 in March.
Well, we're not at 800 in
Okay,
February,
end of April,
so let's
32.
not move all those couple.
Okay, let me start then December with 100 vehicles. So you're at 400 by the end of February. How does that feel?
2 weeks, 100 still a little tight. Yeah, still.
Well, again, the RoboTracker may not capture all of them.
And then
There's a
Elon did say
discrepancy, right,
500.
between.
All right, let's say there's 400. Elon did
And
say
we also
500.
heard that, I think, with Waymo, the companies told us they have more vehicles than what people think they have.
Yeah.
So 400 by the end of February. By the end of April, you're at 1,600. By the end of June, you're at 6,400. By the end of September, you're at 51,000. And by the end of December, you're over 400,000 vehicles.
Okay, let's forget that part.
Right? It starts to get a little crazy, right? If you're doubling every month.
Yeah.
So at some point, you stop doubling and you start to settle into a more reasonable growth rate.
So what was your September number?
September number based on this is 51,200.
Still crazy, but okay. I mean, that's the point, isn't it? Yeah. Doubling every month, maybe for the first, whatever. Yeah. Okay.
Elon has talked about the growth rate in this business going hyper exponential.
Mm-hmm.
So that's even higher than that. And that's based, again, on the idea that customers will be able to add their vehicle to the fleet. At that point, you have hyper exponential growth for a while.
Mm-hmm.
Assuming they can work out the issues you just talked about cleaning and vetting vehicles to make sure that they're safe and so on.
Mm-hmm.
Got the proper enough tire tread and so on left to put them in a fleet and be safe. So
having said all that,
fun.
yeah. Like we said at the beginning, it's like these numbers, they can just be crazy numbers. And so we ignore them. But the most important thing is you're saying trajectory. But there is a crazy number, like there's a number. That's why I keep coming back to the 5,000 number. Like, okay, there's a number that says 50,000. Sounds crazy to think that they're going to have 50,000 by the end of this year. Now, you can do the Cybercab ramp. You can do that. And he goes, okay, once they've solved it, they solved it. They're going slow, 7 only now, unsupervised. Reality is, my car is unsupervised for over a year in Vancouver, Canada, Portland, and Seattle, all over to Washington State. I've driven it like crazy. It doesn't matter where I go. It could have acted as an unsupervised robotaxi for me. So I'm very confident about that technology. But so it's not crazy, but there is a number like I feel like, okay, it's not that crazy to have 5,000. And that's the point of our call yesterday was that 5,000, your estimate of earnings is already at, right? How many
It
cars
puts you into
will
a
get us
gross
to
profit run rate of, I think, in the range of 5% of their 2025 gross profit.
That's the critical.
Yeah.
Just again, you're estimating everything, but at 5,000 cars, you're already 5% of profit. That's what people need to just realize. That's the most important thing.
Yeah, right. It's not such a big stretch. And I'm sorry, by the way, that was by the end of 2027.
What is?
That's 15,000 vehicles to get to 850 million run rate of gross profit. So that was 6,000 vehicles. This chart here. So it's 6,000 vehicles by the end of this year, and then 15. You follow the growth. 15,000 vehicles by the end of 27. That gets you to that run rate of 850 million in gross profit.
Yeah.
Okay, but again, that's a run rate, and that assumes then what's the growth going forward. Wall Street's always looking forward, by the way. So are they adding more cities at this point? Are they growing faster?
Well, that's the other point. Is like
right.
I feel like, okay, I know you got to throw out some number, okay, like some sort of thing, which is okay. At a certain point, it becomes less risk that they can actually roll this out. Like Waymo, when they had one city and they had like 100 cars, who knew? I would say that sure that they probably have people remote controlling these things, but now that you have 3,000 cars, then you go, okay, there are multiple cities, 3,000 cars, the technology works. And then at 5,000 cars, that's where I'm going, okay, well, you know what? Not only does technology work, but the system works. They got it going. Now it's just rinse and repeat, and they can, 5,000 can go to 100,000. If you can do 5,000, what's stopping you from 100,000 except for operational issues?
It's
So
interesting, isn't it? Because I think we've identified a few different potential acceleration points, right? You're just talking about one now in terms of they've operationally figured things out. That allows them to accelerate in each city that much faster, right? They now have a template for copy and paste into each city, and they can accelerate the growth in those cities faster. Another one is Cybercab production. Ramp that up. That's another acceleration button. Another major one is putting customer vehicles in the fleet. That's another press the acceleration button. So it's interesting, isn't it? Because we might be on this very, very low trajectory right now, and we've identified 3 major acceleration buttons that are going to be pressed probably in the next couple of years. That suddenly gets very interesting as far as the trajectory of the growth.
So, like what's interesting is for me, we're looking at acceleration, we're looking at things that could slow it down. But for me, anyways, the capability of FSD to be safer than a human to cause accidents is actually becoming less and less and less concern for me.
Yeah.
You've got Lemonade telling you that it's already 2 times safer than a human based on their access to Tesla's data. There's my own experience, your experience, and almost, all the people on X who are using FSD daily. We rarely, if any more, hear anybody say anything. If there was some issue, we might have heard about it by now in terms of like bad accidents, it doing something on its own. And so for me, and then as time goes, so even if there is an issue, the question is, okay, how long will it take? But at 300 cars, 7 unsupervised, that's why they're doing it slow, right? Do it very, very, very slow. But the point is, there comes a time when, I don't know what number you want to give of unsupervised. It becomes, okay, if they can do that for this much time, what's the difference?
Again,
1,000,
I think it's
10,000,
the
100,000. What's the
trajectory of
difference?
that growth. Does it go from 7 to 8 to 9 to 10? Or does it go from 7 to 15
It's going to
to
go
45?
7, 8, 9, 10, 11, 12, 15, 17, 20,
Yeah.
30, 50, 100, 1,000, 2,000, 5,000, like that. That's
Right?
what I'm saying.
Yeah.
It's going to be very slow. And then once you have this thing works, it's
Yeah.
driving around. Like if you have 50 odd cars already driving around, why can't you do? We answered the question of why Waymo stops at 500. They have 500 cars per city, maximum.
Yeah.
They didn't have to. If their economics work for them, they could have had 1,000, 2,000 cars per city.
Right.
The only reason they didn't is because of their economics.
That's right.
So
Yeah. And the
that's why
beautiful
your
thing about
number,
that is
yeah,
Waymo actually, I think, is giving a gift to Tesla in this regard because they are paving the way literally
yeah,
by going into all these cities, getting people used to autonomous vehicles. They're dealing with the slings and arrows of issues. They're dealing with that. That's fantastic. Now Tesla can kind of slide in behind them and grow much faster into higher levels. So we actually, as Tesla investors, should be thanking Waymo for their hard
I
work.
always do. Yeah,
Yeah.
I do. Appreciate Waymo so much.
Yep.
Wow. Okay. I think this is the most important thing is robotaxi ramp scenarios. And you put some numbers in, you attached it to earnings or profit, uh, how many cities, how many per city, what the growth rate is, and it's really trajectory. And that's what we're watching for. And I think that's what we're all watching for, but it's painfully slow right now. And so that's why it's painful for many of us. 7, 8, 9, great. Just
Yeah.
we're,
But
we're, we're going to get there.
it's the early stages of exponential. And if you look at any exponential curve, sometimes it's barely noticeable. It's actually boring when you look at exponential growth rates. And then all of a sudden, poof.
Yeah.
And we've identified, again, a number of acceleration buttons, as I call them now, that can cause that to accelerate very quickly. Let's just repeat them real quick again. You mentioned another one. It's the underlying FSD itself is getting better and better all the time. That's another acceleration button, because it gets to the point where Tesla is supremely confident with the underlying technology. They say, okay, now every customer vehicle is unsupervised, no problem. That paves the way for them to let all those vehicles in the fleet, maybe even earlier, but that certainly would be one catalyst. Cybercab production, regulatory improvements, just figuring out the operational issues city to city and copying and pasting, all that, right? Because if you have it in place in Austin and you figured it out here, then you go to Dallas and Houston and do the same thing. And every step along the way, they're going to get better and better at this and faster. All those things are going to help accelerate this. And so I do think that as boring and as painful perhaps as this acceleration or this ramp has been so far, we may be pleasantly surprised in the next couple of years with how quickly it can accelerate from here.
I think so. All right. You always do great work. You always put things in context and put the boundaries around something to help people think this through. Again, as you said at the very beginning, these aren't predictions. You're just trying to help create the scenarios of just to help people put the boundaries. I love it. Good conversation. It is the most important thing that investors need to follow. And so this it opened up my eyes a little bit here. Thank you.
It's cool though too, Herbert, because this is the most important catalyst I think that we've identified for Tesla this year. But it's not the only thing. There are some other things on the margin that are pretty cool too. The development of Tesla Energy and Megapack, the new Roadster, development of Optimus, FSD take rate improving and helping auto sales as FSD improves. All those things I think are also kind of exciting. But from a value add perspective to Tesla as a company, I think they all pale in comparison to the Robotaxi ramp.
Well, except Optimus, once that comes a couple of years from now, 3 years from now, as you've shown in your charts. Thank you, Cern. Talks everybody. Bye-bye.
Thanks, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.